simple parallel channel gave us the hint that we might be prone for a short-term correction. But do we need to panic? Welcome back to Coffee Infused Crypto. Uh, Please stick around today because we're gonna discuss Bitcoin on the short term, on the long term, and I'm gonna teach you a very to say the least, a powerful trick where you can alter your Fibonacci retracement so that we can forecast or try to figure out where our retracement would be. So this might help you a lot in your trade. So stick around till the end of the video. But to start first, after going to the weekly a couple of days back, I noticed that we were hitting on this candle last week, this parallel channel. And after this parallel channel supported us around this area to the downside and here and here, so on 3 occasions over different time frames, and resisted us here and again here. I only needed 2 points of interest in order to connect them and have my weekly, like this is way since 2021. So yeah, so this is like a multi-year parallel channel, and we hit it here, and this week we are retracing a bit. So do we need to panic, or when do we start to panic, or is it healthy, a healthy correction? So stick around. Let's go first on the shorter time frame, discuss what's gonna happen or what's happening on the short time frame. So this is on the daily. Relatively to the weekly, we are on a shorter time frame. So remember this broadening wedge where we broke it to the upside, created this parallel channel, and then hit it on multiple occasions as a resistance from the upside and a support from the downside. And as soon as we breached it to the upside, we did go and jump above it over the 30,000, which was the psychological level, as we said. It supported us for a couple of days, and now we lost the 30 and we lost the support as a support and flipped back into the resistance, the stop side of a parallel channel. So on a normal when we're below it, it will act as a resistance. When we break it, when we break it to the downside, it'll start acting as a resistance, since it was acting as a support here, as you can see. So definitely we broke it. Now it's clear on this day, and unless today closes above it, then yeah, we are most probably gonna it's gonna act as a resistance if we try to retest it again. So the middle of the parallel channel did act as a support, and this is beautiful to see. So this would be our first target at 29,184. The second target would be this green support. We have it at 28,606, which is coinciding by the lower part of this parallel channel. And if we flip our moving averages on the daily, we notice we have the 20, the 50, the 100, and the 200. So we are still in an uptrend. As we said yesterday, the moving averages will help us to detect the trend. So we are still in an uptrend. The moving average is still going up. We're still creating higher lows. Okay, this was our last higher high, and then now we created a lower low from this segment, but a higher low generally speaking if we zoom out a bit. So the trend is still in an uptrend, and this will act as a support, which is or directly below this the center of the parallel channel. And if we switch to our next parallel channel on the daily as well, and this is a chart that has and we mentioned it a couple of days back, it has been so accurate with us. And as you notice here, again, when we hit the top band of this parallel channel, we rolled over and we moved to the center of this parallel channel. If we flip our moving averages here, you can see how beautiful the 20 is coinciding with the center of the parallel channel, and we have the 50 is coinciding with the bottom of this parallel channel, and we have the 100 is coinciding with the almost coinciding by the time if we ever got there, or if we got there, the 100 is moving still to the upside, so it will meet at the center of the lower parallel channel, and the 200-day moving average is coinciding at the bottom of the second parallel channel. So those two parallel channels are coinciding perfectly with our moving averages. By the way, if you haven't watched that video, it's yesterday's. Go back and watch it. Very important to understand the parallel channels. So still, if we look at things in a simple way with only two parallel channels, if you notice, then this is very respecting the parallel channel, and the price is very much respecting our channels here and is moving in this channel. So if this we have a support at 29,157. If we are supported here, we are prone to move back to the upper part of this parallel channel. If we lose this, we get accepted back in this triangle, which has a support at the moment and will flip resistance if we lose it, 29,157, and the lower band, which is approximately at 27,597 or 27,600, relatively speaking. That would be the very low part of this parallel channel, our first one. So all in all, we're still in an uptrend, as you can see, so nothing to worry about for the time being. No need to panic, and we'll add a red flash here indicating that we got rejected right at our resistance line. So if we move back to a macro weekly perspective, and this is where we are here, and yeah, just stick around 3 more minutes and we're going to discuss how deep we are prone to be moving to the downside. But again, guys, look at this. After breaching this orange support, and now we are in the middle of this band, which we anticipated to be a very tough area to move or to proceed forward. It should resist us. Now we are retesting, trying to find a support at the edge of this orange box, at the bottom of it, or we're in the middle. So anywhere in this orange box, if we manage to establish a support, a proper support, and trend sideways, that would be great. So we would still be in an uptrend, trying to figure out support at 28,900 and 29,966 or $30,000. So anywhere between this area, moving sideways would be very good for us. But even if, to go back in history and make and confirm or double confirm that this is nothing to worry about and is so far so good, I would love to go back to 2015 and look when we broke this. Okay, so look at this, how beautiful this trend is, right? But let's zoom in. So whenever we broke this, look at this red candle. So we broke it to the upside, and then we had a 1 week of this, retest or retracement and reconfirming the support. So from the macro view, this doesn't look much at all, right? So it's a beautiful uptrend. But if you zoom in and check the volume of this retracement, I mean, look at this. So this is the top of a wick, and we went, let me turn on the magnet so that we can get an accurate reading. That was a 40% in 1 week retracement to the downside. Meanwhile, all we had now is a 5%. So and still, when we zoomed out and when we zoom out and look at the move, yeah, I mean, this isn't even relative to or relevant at all to the mass move that we had right the week after and from here on forward. So but people in those 2 weeks were panicking, right? 40% move to the downside. We've seen it before. That's why we don't need to, start panicking or worrying at the moment. Retracements are healthy in an uptrend. They solidify and make the uptrend even stronger. But where are we heading, or how deep can we go down. So this is very important, guys, and this will help you. So if you did stick to the end, now I will teach you something if you didn't know, or maybe you know, but I will help you readjust it in a way and keep an eye on it. So this is a naked 4-hourly Bitcoin chart. And this is the Fibonacci retracement tool. You can find it here on your trading view or in any platform you use. So the thing is, when you first use it, it will look something like this. So this would be the stock, okay, the Fibonacci. This is how it will look in the first. So I love to adjust it. So here you can adjust it, okay? So you can highlight the levels you want and omit the other levels, change the colors and stuff. And then you can go and save as a template. So I have one saved here and I highlighted the 0, okay? And I colored it, the 0.5, the 0.65 and the 1. So those are the levels on this exact template that I would want to focus on. Why? Because 0.5 is a very important level, one of the very important levels in the Fibonacci extension tool or retracement tool. So I always tend to look for the 0.5 level, and the 0.65, which represents the golden pocket, is a very important level as well. So all I want from this template is those two levels. And why do I want them? So yeah, I save it as, and I name it whatever I want, adjust the colors however I want them to be adjusted, and I click OK. So now I have my updated, Fibonacci with only two levels, the 0.5 and the 0.65. And now notice, guys, whenever we start an impulsive move, for example, this impulsive move here. So let me zoom in, see this impulsive move here. So let's take the magnet, take the Fibonacci and highlight the start of this impulsive move and go all the way up to the wick of, okay, so the magnet will not help us here. So let's go. First move would be, let's go to this wick here. Okay, so let's go here, those wicks, and we can go even higher on this wick. So what's happening here? I'm gonna tell you. So notice how the start of this impulsive move was the 1, okay? So we went all the way and we caught the highest wick on this move. And usually whenever we start moving to the upside, okay, and hit the highest point in a move, I always tend, usually we tend to have a retracement of minimum 50%, and that would be the 0.5, or that would be the first level. Usually if in an uptrend I'm looking for a trade, right? So if in an uptrend I'm looking for a long trade or to buy in at the best position possible. So throughout history, we notice that any impulsive move to the upside is prone to retrace to at least the 0.5 level or even the 0.65 level. So those two levels in an uptrend, of course, would be the optimal levels to fire up a long position. Of course, we have to have another or other supports and resistances, weekly pivots and all of that, but this will help us detect where is almost to add up to our other analysis. So technically we tend to hit the 0.5 or even go deeper to the 6.5 or the golden pocket before our continuation. So that would be the level. If we broke to the downside, I would be concerned that we are shifting in momentum. So far, as long as we're above the 6.5, we are in the golden zone of a perfect position to be entered in a trade or to buy in position to the upside. And let's go and backtest this. So whenever we're in an uptrend, okay, so let's take this low here, so all the way up to this point here, and move it sideways. You notice that whenever we moved from the lowest point and hit the highest point here, we tend to go back, retrace the 0.5 and the 0.65 one time, then go back up, come back down, retest this area, wick below the 6.5 but close the 4 hourly above it, and usually we were supported by the 0.5 the whole way around until this confirmed its support, and we continued moving to the upside in the other wave. So this was an example. Let's check another example. So from an impulsive move around this area. So let's take this low point here and go all the way up to this point, the top of this impulsive move, and drag to the sideways. So our impulsive move top was here at the moment, or at this current area, and this way we can start, the move was started around this green move, so we were going down and then we started moving to the upside. If you notice here we have the let me get the brush, retest 0.5, retest 0.5, and then showed support or confirmed support and stayed above it, and then that continued the uptrend. So another example, let's go back till the start of this impulsive move to the upside. So this was the top of the move. Before we even know it, we reacted at the 0.65. So yeah, that was like before we even know it. But let's check a downtrend scenario. So if we were at the top of a move, so from here, for example, we started moving to the downside. So let me take this and go to this wick here. So okay, so before we even dump even lower, so first move was this wick here. Let me zoom it in for you. So from the beginning of the downtrend move till this bottom wick, you notice that we tend to go, okay, retest golden pocket 6.5, rejected, go down, tried to break the 0.5, failed, and then rejected, even though it came back to 0.5, failed to break it to the upside, rejected, a third time came up to 0.5, rejected us until we broke to the downside. So this happens almost every time we have an impulsive move. So here to the upside, we started this impulsive move all the way to the higher low of this wick. So we start here from the beginning of this impulsive move all the way to the top, the 0. We retrace 50% and go into the golden area pocket or golden area zone between the 65% and 50% retracement, where we found a good entry point and continue to the upside. So yeah, we usually tend to always come back and retest, and we can do this over and over and over again. In every impulsive move you will find that, yeah, this is an impulsive move to the upside, go all the way, this was to where did we come back and retest this one? Yeah, this is the highest point in this. So sometimes we peak but later, but when we move forward, we can notice that in every impulsive move from the beginning of the move, okay, we came back here, we didn't know the peak until here, but later on, yeah, it showed that the 0.5 was our support the whole time. So until we lost momentum and moved to the downside. From here, we started this move to the downside and wicked around this area. So if you notice, came back down. So if we move this here, notice this wick, we always tend to come back up, retest from the upside and from the downside, retest the 0.5 area. So this gives us a nice idea or indication of whenever we have an impulsive move to the upside or to the downside, we tend to always come back and retrace or retest the 0.5, either up or down, depending on where we're starting from. So to put things into perspective again, we started our move from this area, okay, and we topped so far at this area. So take the Fibonacci retracement tool, go from the lowest part to the top part, extended, and there you go. So we just hit the 0.465, the golden pocket at this area. So I would start to be concerned if I start losing this. So then it's a weaker trend, of course, and we're losing the golden pocket. But as long as we still didn't lose this, so it's very normal to go up, come back down. So here we retest the 0.5, right? So we came up, came to 0.5, then came all the way to the 0, the top of the move, and then came back, retest 0.5, failed, and now we're at the 0.65. So as long as, yeah, we are be above the 0.65 and the 0.5, those would be a good opportunities to go in. Of course, we have to assess. So if we go back and have our different analysis, so this is a parallel channel, we're at the center of this parallel channel, right? So we're supported around this area. If we flip our moving averages, we notice that the 20 exponential moving average is supporting us alongside the center, alongside our support 29 157. So we have a triple support around this area and the golden pocket from our last move. So this is the quality of a trade to the upside would be better, and the probabilities of us reversing from this point is or are better than just going and relying on one single indicator. So that I hope this one helps you to utilize whenever we have a move from the lowest low to the highest high in the to the upside or to the downside. This will help you figure out where our retracement or where our even when we're going to the downside, we tend to push back up and retest some levels, and those are the levels that we usually tend to go back up or down and retest them. So yeah, that's everything for today. Still nothing to worry about. Even if we go 40% any point at this from now till the beginning of the second year, any retracement, any bigger number of a retracement is a buying opportunity right before the halving of Bitcoin. Keep that in mind. So until then, guys, see you tomorrow. So stay safe. And of course, if you find this content helpful, hit the thumbs up button and share this video to or with someone you care for. So that is everything for today. I'll see you tomorrow. Bye bye.